Yo, what's going on, guys? So I'm gonna be going over my trading rules, and I posted them on Twitter a few days ago. So I'm gonna be basing it off of these, and just so you guys know, you guys have to understand that these trading rules are for me, and they might not work for you. Maybe a few of them will, but I think it's important to review as many trading rules as you possibly can from other people. And when I first started trading, everyone always told me, "Oh, have your own rules," but I was so confused. Like I had no idea what rules to do. I was like, "What rules should I do?" Um, like how do I make my own rules, blah blah blah, and I was kind of lost. But I think reading other people's rules and then just having screen time and actually going into trades myself, that was the main thing that helped me make my own rules, because I started to do things like two or three times and I'm like, oh, this works, so I'm gonna make this a rule. This doesn't work, I'm gonna make this a rule, right? So following what my rules and other people's rules and getting exposure to different ideas of rules, I think are going to help you guys make your own. And um, I think, and screen time. So screen time and exposure to other people's rules are going to be the most important for making your own, right? So starting with my first rule, never buy options in increments of 0.05. And the reason why I do not like doing this, and I've been wrecked on it a ton of times, is because one, if you have a stop loss, say you have a stop loss on Webull, let's go to like Duck or something, or any broker. And so we go to the options, we go like 71 days out. So say we are looking at this 110 contract. The ask is 0.15 and the bid is 0.10. If you can get a fill in the 0.10, if you put an order in and can get a fill in the 0.10, great. But it's very hard to get filled at the bid. In my opinion, and in my experience at least. And a lot of people usually buy at the ask for options like this. So as soon as you buy this 0.15, you're already gonna be down $5, and that's just like it messes with my mental game a little bit, because I see it, I'm like, oh, it's red already, like, and then I just like want to sell it. And then if you buy it at 0.15, that's the ask, and the bid is 0.10, and then the stock price drops a little, the ask will be 0.10 and the bid will be 0.05. So if you already bought it at 0.15, it's going to be really hard to sell it at 0.10 if that's now the ask, and you're going to have to sell it at 0.05, especially if it keeps dropping, and then you're already down $10 in two drops of the stock, right? So in my opinion, it's more, this is more of a rule for small accounts in my opinion. If you have a big account and you're going light on these 0.05 increment options, I don't think it matters too much. But you're already down when you take them usually, and it's very hard to get filled at the bid. So like you're already down, and then if it drops down another 0.05, you're already down, like you'd already be down 50% for this one. It depends on where the contract though is. So yeah, and then another thing, why I don't like these is because if you put a stop loss, so say the ask is 0.30 and the bid is 0.25, if you put a stop loss at like 0.20, sometimes you'll get filled at like 0.15, and it's just you're down. So say you got it at 0.30 and your stop loss is 0.20, and you get filled at 0.15, you're already down $15, instead of just, if you were to just sell at 0.20, you'd only be down $10. So using stop losses with 0.05 increments is not very good in my opinion. I just stay away from these, and you'll find that if you follow a lot of these guys on Twitter alerting options, you know who they are. They alert really out of the money option contracts plays that are always moving in increments of 0.05, because the user already have them loaded, and then when they alert them, they go up $5. So the bid will go up $5 and the ask will go up 0.05. So then they can just sell for a nice $5 gain. If they have a ton of these contracts, it's a huge profit for them. So I just stay away from 0.05 contracts, and I stay away from people on Twitter who alert these 0.05 contracts. I have not had good experience with them. Maybe you have, but that's just one of my rules. So let's go over the second rule right now. Never hold an option overnight. So every time I've held an option overnight, it has gone nowhere. It literally destroys my account. And especially for you guys with smaller accounts, definitely don't hold options overnight unless it's like 3 weeks or more out, maybe 2 weeks or more out. If you're holding a weekly or an option from that expires next week, if you're holding that overnight, and the stock goes down or the market's bad, you're literally going to get wrecked. And it's not fun waking up in the morning and you see stock, you're already starting off red for the day. It just ruins my mentality personally, and that's why I don't like to do it. And if you take a weekly, like a SPY overnight, that is basically gambling. You have no idea what the market's going to do tomorrow. Even based on support and resistance, the market could just change all of a sudden tomorrow, especially like bad news, anything like that. So I never hold an option overnight, and that's kept me green. And I always start a new day with 100% cash, and it just helps with my mentality because it just clears my mind, and it helps me find new opportunities because I don't really have any existing positions, and I know there's a lot of positions I could bank off of like during the day. So my third rule is always scale 10% with stop loss for rest of entry no matter what. So whenever I'm up 10% of a trade, you have to understand 10% is a base hit, and 10% is a really good trade because if you get 10 10%ers, which is very easy, that's 100%. And all these 10% will add up. Like they will add up to 1,000% in like a month. If you take like 5 plays a day, so say you take 5 plays a day, that's 50%. So in 2 days, that's 100%. And then in 10 days, that's like 500%, 20 days, 1,000%. I don't know if that's math right. Hopefully it is. But I love 10%. And the reason why I try not to sell all at 10% if it's my own trade is because I usually sell half and then leave a few runners, because if you're calling out a play that is going to exactly 10% and dropping every time, that is very unlikely. It often goes farther than 10%. 10% is just what I like to sell, just in case it does go back down again. But I always leave runners. I always have half and let it ride. And sometimes I end up going like 50, 100%, even like 200% sometimes. But I always leave half after I scale up my 10%. And if I do leave half, I always put a stop loss at entry. And basically that means I've already taken profit at 10% and I put a stop loss at my entry point. So no matter what, if I get stopped out, I'm still going to be profitable from the 10% I already took earlier. So that's just a general rule I have that's helped me stay green, and it helps me a lot, and it helps me take profits fast, sometimes a little too fast, but it's all right. It's kept me green, like I said, and compound gains add up. So my fourth rule is if I take someone else's play, sell most of it as soon as I see 5% or green in general, because I don't have the conviction. And this is very important. And I look at this as being a free $20 bill on the ground. So if you saw a free $20 bill on the ground, would you pick it up? Probably. If no one was around, you would probably pick it up. But if someone was around, you'd pick it up, try to give it back to the person. But that's not the point. If no one was around and you saw a $20 bill, you'd pick it up. So using someone else's idea, or like taking an alert and having to do no effort besides buying the alert from when you see them alert it. And as soon as I'm green, I sell it because I don't really know why they take the alert in the first place. And another rule I have is I always look at the chart if I'm ever taking other people's plays, but it's more satisfying when I do take my own. So when I do take someone else's, I sell very, very quickly because I have no idea why they took it. I don't have their conviction. If you guys have ever taken your own play and you're like, oh, I think it's going to do this, I have this all charted out, and it's taken you like 30 minutes to chart it out and finally hits your trigger, you feel very satisfied that you know where it's going to go, so you know how long to hold, and you're very excited about your play. And when you take someone else's play, you're kind of like a lost dog, like you have no idea what's going to happen. So I just see that as free money. I take profit very fast on other people's plays because it's basically free money. And that leads in my fifth rule: stop losses on other people's plays are 10% no matter what. So if I take another play and it's already down 10%, I don't even care. I don't even look at the chart. I just cut it because I took someone else's play. It's not my conviction. I don't know why they took the play, and I want to cut that loss as fast as I can because it wasn't even my play in the first place. So why would you not cut it? It's just simple as that. And that's another thing that's helped me keep green. So my sixth rule is stop losses on plays are 20% for options and 13% for shares. So this is for my plays, not other people's plays. Other plays, it's much less than this just because it's other people's plays and I have no idea what's going to happen and I don't have that conviction. So the reason why I say stop loss on my plays are 20% for options no matter what is because if you're letting a trade go down more than 20%, that is a huge hit to your portfolio. And if you're taking a bunch of 10% base hits, then if the stock goes down 40, 50%, the more it goes down, the more percentage you need it to go back up. So if it goes down 50%, if the stock goes down from $10 to $5, say, if we're not talking about options, say we're talking about shares, it goes from $10 to $5, that's down 50%. And in order to get back to that $10, you need to go from 5 to 10, and 5 to 10 is 100%. So the more you go down, the more percentage you need to gain back. So I always cut at 20% and don't look back. I usually just move on to a new setup and look at a new trade. Like, I'm always cutting at that time, like, no matter what. I think some people do 25, 30%. I think 30% should be the max rule, to be honest. Because by the time it's down 30%, you're just down bad. That is bad risk management if you're down more than 30%. And then I do 13% for shares because shares are much safer than options, and they move down and up a little slower, so they might not go down 13% right away, as an option might go down 30% in like a minute. So that's just my general rule. I usually start looking to cut it around 12%, but 13% would be next. My 7th rule is I play SPY 3 times a week and watch it all 5. So SPY is very important. You want to understand SPY, and I'll do another video on how I play SPY. But if you're watching SPY and you can chart SPY and scalp it very easily, it'll help you like take trades on other stocks, and a lot of the market follows SPY. So if SPY is green for the day right now, but if SPY is super red, you'll notice a lot of these things on my watch list. That's not my watch list, but if you go to my watch list, a lot of these tickers, like most of these, will be red. But as you can see, it's kind of half and half. And SPY cousin just tells us that because it's been up and down all day. So we kind of see the market is in like a consolidation zone right now. So if you know how to play SPY and you know how to read the levels, you can get very easy SPY scalps. I'm always scalping SPY for like 10%, 50%, and like literally I bet you could buy a call right now and it would go 10% in the next 5 minutes. Like this looks like a good time to get a call because look, bullish hammer, and it's forming a nice green can right now. So you can scalp SPY very, very easily, and you really want to watch it because I usually base my other trades. Like, say I want to take a NVIDIA call, and as you can see, we give a nice bounce off of VWAP. Say I want to take a NVIDIA call. If SPY is super red, I likely will go light in the NVIDIA call, or I just won't take it at all. So I'm always watching SPY, and SPY makes for very easy opportunities. And on 0-day expiration, the contracts can be cheap, and even today it's 1-day expiration, and this 466 call is only $43 compared to like if you took if you took NVIDIA and we go to the contracts, look, $231, $153, those are much more expensive. So I think reading SPY, you can build your account up playing SPY, and it definitely has helped me read other stocks. SPY respects technicals very, very well, in my opinion. So SPY is just like one of the most important things you should know. So you'll start to learn that with screen time, but that's just something you really want to follow. And if I'm not green at SPY for a week, I need to study or change something. So I am not red on SPY a lot because I know how to play it. I know how to get easy scalps. And if I do play SPY, I actually sell a little too quickly, but I usually am green on SPY. And if I'm not green on SPY, that probably means I'm trying to go against the trend, or I'm not playing with the trend, and I'm just not like understanding, or I'm out of it. And that definitely tells me I need to do some work, because I think it's very easy to be green at SPY. Especially as I get more experience. I mean, no trades are easy, but I think SPY is very easy to understand and makes for easy scalp opportunities. So my goal is to be green on that each week. Don't take other people's plays without looking at the chart. Like, why would you blindly take an alert? You want to look at the chart and see why they're taking it. That's just like a general rule you should know. And then once I'm up for 1% of the day, I do not play any setups that I'm skeptical about. I only play clear patterns I see every day, and I have a high win rate. So this 1% rule is just for me, but some of you guys have big or even smaller accounts, it might be more or less for you. But if I'm already green, so basically if you're green for the day and you're looking for a setup in, say you want to look at like, let's go to Dollar General, and you see Dollar General, you think it's going to bounce right here, but you're like, is it going to reverse? Is it going to bounce? And you're kind of questioning yourself. Do not take the trade, because if you have no idea what's about to happen right here, if this isn't telling you enough, like if you're reading the indicators and it's not telling you like enough about what's going to happen, do not take the trade, because that you're basically just risking more than what you think is going to happen. So if we look at like Apple right now, So say you notice it makes a lower high right here. So as you can see, it makes a lower high right here, and you see it's in a downtrend. So you ask yourself, you're like, Apple's in a downtrend. It just got rejected by a VWAP. Should I take puts on it? And you're pretty confident because it's in a downtrend. You're clearly following the trend. It's under 148 strike level. So that's like a safe trade to take. You definitely want to take those trades if you like have enough to back up your thesis and you're following the trend. If I'm green for the day, I never want to try to guess a trend reversal. I just follow the trend usually, and I take profits quicker if I'm green for the day. So it's all up to you. If you are green for the day, some people say don't overtrade, stop playing, but I don't really like that idea. I like the idea of if you're green for the day, like who cares? Just your main goal should be a good trader and play A++ setups. You don't want to play any bad setups or any like skeptical setups you're like not happy with or you don't know what's going to happen. And as you can see, I had this charted earlier. I posted on Twitter. This is a rising wedge and it got rejected by this 75 resistance. This would have been an A++ setup. As soon as it drops below here, we saw a nice almost 30-cent move. So this is just an A++ setup. I see rising and falling wedges every day. I play them a ton. Another few setups I'll take no matter if I'm green or red is double top breakouts or double top rejections and double bottoms, double bottom break or double bottom bounces and double bottom knifes through. So I kind of have my own patterns I see every day that I like to take like no matter what, no matter if I'm green or red. But that's just me. But I think that's very important. You want to play A++ setups. Who cares if you're green or red? Just make sure you're playing good setups. Never play a bad setup. And if I go to this chart and I'm like, oh, Activision. As soon as I look at this chart, if I don't like this, I just move on. Like, so I'm in apps. Pretend I don't like this. I look at it. I'm like, yeah, I'm not charting that. I'm just gonna move on and look for a different play because there's always other plays and there's so many opportunities in this market to make money. And there's like I just said, there's always other better plays. I just basically repeating myself because I don't know. I just ran out. My thoughts just ran out. But you gotta understand there's always opportunities and there's always ways to make money. There's always another runner tomorrow if you're playing penny stocks. If you're playing a penny stock and you're like, oh, this ran 100%. I wish I got into it, and now you chase at the top and you lose. There's always another runner tomorrow. And you just have to understand that. Don't have FOMO. And the last rule is it's not really a rule, but when you go into each trade, I expect to lose, and that way, if you do lose, your emotions aren't out of the roof. You're not super mad because you're like, oh well, I expected to lose and I just lost, so I don't really care. Like I was right, basically. But if you win the trade, you're basically it's a good trade, even though you expected to lose. You want to be green. So if you expect to lose, you'll definitely cut losses quickly. And if you expect to lose but the trade goes green, then I guarantee you'll take profits a little more quickly rather than bag holding. So that is about it. That is my rules. I hope you guys enjoyed. Let me know if you have any questions about these rules. This video did go a little longer than I anticipated, but hopefully you guys like them. And other than that, I hope you guys have a rest of your night. Make sure to tell your friends about this YouTube channel if they want to learn. Make sure to use my Webull referral code. And follow me on Twitter, blah, blah, blah. Join my Discord, whatever. Yeah, that's basically all I got. Other than that, have a good night, guys. Peace out.